Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started. Hello, and welcome back to another episode of Alternative Investments Chat. Today, we are going to explore one of the least understood, I think I would go out on a limb saying.
Lesser known.
Yeah. But it's
obscure.
Obscure. Oh, I like good words like that. Obscure, but one of the fastest growing corners of the alternative investment world. Litigation finance.
Dum dum bum
Yes.
bum bum bum.
There we go.
bum.
Say,
Law
I
and order.
object.
Don't. Yeah.
All right. Get on Law and Order. We talk about copyright infringement. Are we going to get in trouble for? Were we okay to use that?
Just pitch it up.
Yeah, we might have to
just pitch it up and speed it up, and it'll be fine.
speed it up, pitch it up.
Yeah.
Or we might just have to block it. If you just heard a patch of silence after that, it's because we did not get the rights to use a song.
Yeah.
We can't even say the song. So
Mariska Hargitay, don't come for me.
exactly.
But you're right about that. Let's get back to the matter here. Litigation.
There we go.
It is exactly what it sounds like, money for lawsuits, right? So imagine investing in a lawsuit like you might invest in real estate or stock.
It's hard
bizarre,
to imagine, but we're going
right?
to try to break it down. Yeah.
But if the case wins, you as the investor get a share of the awarded money. If the case loses, you get nothing. It appears to be pretty straightforward, but I think we should dive a little bit deeper. Tell me more about litigation finance.
Litigation finance. So litigation finance, also called legal funding or third-party funding, is exactly how you described it. So an outside investor provides money to cover the cost of a legal case in exchange for a share of any financial recovery, either like settlement or a judgment.
Sure.
If the case is successful. Successful. Remember, there's the key word. I like to think of it kind of like a Shark Tank, but the product is your lawsuit.
Interesting.
So you got to really look into this. So here are some of the basics. A plaintiff, law firm, or sometimes even a defendant needs capital to fund a lawsuit. Okay. A litigation finance firm evaluates the merits of the case and the likelihood of a favorable outcome. If approved, the funder pays some or all of the litigation costs, such as attorney fees, expert witnesses. Yeah, you got to pay them to come testify for you. Court fees, and whatever other expenses may be accrued during a lawsuit. If the case wins or settles, the funder receives an agreed upon percentage or multiple of the investment, which we'll go into a little bit later. If the case loses, the funder typically gets nothing, making it a non-recourse investment.
Rough.
So explain why these even exist. Because sometimes when we found these, I was like, who can use this? Is this a real thing?
Yeah.
Oh gosh.
For sure. So let's get into that. Reason one, lawsuits are expensive. We just talked about a lawsuit that happened in our last episode about intellectual property.
Yeah.
That was expensive to the tune of over $600 million.
Well, that was a settlement, but they ended up paying $200 million in legal fees.
Right. But so even if it's not that expensive, it's still like buy a house expensive.
Yeah.
This is a large sum of money.
Yeah.
And it can take years to resolve. Number two, plaintiffs or firms that are working on contingency may not have cash flow to pursue a case.
Yeah. It's not like you can go to the bank and say, can I have a loan? I want to sue my neighbor.
Right.
They're like, what?
Yeah, that's what Judge Judy is for.
There we go. Love that girl. Love that girl.
Right. But litigation, this is the third reason here. Litigation finance can level the playing field, right? When one side has far more resources. There are several different entities that actually utilize litigation finance. These are individuals who are in personal injury, employment, or civil rights cases. Businesses pursuing contract disputes, ding, 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 IP infringement or antitrust claims, or law firms to smooth cash flow across multiple cases, right? Like we said, it's expensive.
Yeah, I didn't really realize like so many cases needed financing. I never, again, you don't really think about it, but like if you look around, everything costs money. A lawsuit also costs money. And again, you can't just go to the bank and say, can I get a little personal loan so I can go sue my neighbor because their grass is on my sidewalk and I'm instead of, seeking violence, we never condone seeking violence, but like I'm going to hurt them. So I'm going to give them a lot by money by getting the right. So I'm going to go out on a limb here and say there's probably some degree of risk because there is with every kind of investing.
If I had to guess. And
so things that we want to make sure if you're thinking of investing in this type of asset class, here's some stuff to consider. It can be expensive. Funders often require a significant return due back because of the high risk. Okay. They look at your case and say, hey, it's going to win, but I want 90% of it.
Sure.
That might be high. I'm not really sure, but because it's if you lose, they lose everything, Control of the case strategy stays with the plaintiff and their attorney, but some terms can vary. So if you choose to be an investor, you are not then part of the legal team to say, this is how I would like to see the case go down. No. It's give me the money and be quiet.
Yeah. And you have to trust the professionals to do their job.
Exactly. And legal rules differ by jurisdiction. Some places have restrictions or disclosure agreements. So what this means is that like sometimes you can't help fund cases or that you have to disclose that you're getting funding from an outside source. So now I think we've peeled back the curtain and looked at litigation finance as an investment strategy a little bit. Because that's what the podcast is about, right? I think most times I'm worried. So now something somewhere right now, I always think about this, that there's like some like Wall Street guy in a snazzy suit and he like comes outside and he's like yelling on his phone. He's like, yes, I want to invest in copyright infringement case. I think it has real potential. Like who says that?
Right. Well, from an investor's perspective, litigation finance is essentially a portfolio of legal claims. So this might be something, you're looking at a portfolio, you want to expand your portfolio. Yep. This might be something that said Wall Street person is interested in.
So weird to me.
It is a little odd, but each has its own probability of success, right? Mm-hmm. Time frame, potential payout, like we mentioned earlier. But reminder here, investors, often specialized funds, provide non-recourse funding to plaintiffs, law firms, or corporations. If the case wins or settles, the funds received either could be a multiple of the investment amount, so let's say 2 to 4x, right, whatever the agreed upon amount is, or it could be a percentage of the actual award or settlement. But again, if the case fails, big fat zero, right? So here's why an investor might like it, our snazzy suit guy.
Yeah.
Low correlation, right? Legal case outcomes aren't directly tied to the stock market and market performance. This could make it a diversification play. Diversification is always the big attractor here with any sort of alternative asset class.
Yeah, I don't think anybody on the Diddy trial was cared about what NVIDIA or any S&P 500 was doing that day. They don't. There's very low correlation. Those don't mix. I get it.
And especially in America with our rule of law and our court system. It has to do with how the jury finds you and what evidence is presented and the case that's presented, right? Not like how's the stock market doing today. So that's could be a good thing, right? Number 2, there's high potential returns, right? Like if you win, you could yield like a huge 20 to 30% profit, right? And that could mean annualized returns for your portfolio that's really attractive. Obviously, there's huge risk here, right? Like,
so you're not going to find that kind of return in oil and gas or the real estate or anything of that nature. So
yeah, maybe not, right? Like all of these things have a lot of risk. Certainly, you're not going to find this if you invest in like a bond.
Yeah.
You know what I mean?
Nope.
Or like a CD. Like that's not going to be the return that you see.
Right.
Also, there is a growing market, right? Legal costs are continuing to rise, and it's really difficult for people to pay for these things. And as awareness continues to grow about this particular sector, demand for funding could increase here, which means, more potential opportunity for a good investment. So now that we know why investors like it, why don't you break down a few investment models here?
Okay, yeah. So when I was doing our research, some of these make sense, some of them don't. So hopefully when I'm breaking them down, maybe they'll click a little bit more, not only for myself, but for our listeners as well. So first up, we have the single case funding. So this is a very high risk, high reward. You're backing one lawsuit directly.
All the eggs in the basket.
Here you go. Fingers crossed. You better hope that your money is going for,
A winner.
Forensic Stanley Lee. He's top of the class. Like you're hoping everything is, you're putting the funds there. You're hoping they're going to pay off in the long run. Okay. We have portfolio funding, which to me sounds like a better model, personal opinion. Of course, funding multiple cases from the same law firm or across firms to spread the risk. Again, put a little money in this one, a little money in this one, a little bit of money in this one, hoping for the best on all of them, right? We also have defense funding. So this is not as common. It's less common than the others. So funding a defendant's legal cost in exchange for financial upside. So an example is a favorable settlement, saving the company money.
Yep.
Okay. And then you have monetizing judgments. So this one is the one that was really kind of weird for me to grasp.
All right, let's get into it.
So a lawsuit that's already been won, okay, and a plaintiff has a judgment or a settlement awarded. So they win. They're saying, hey, we're going to give you this much money.
Yep.
But they haven't been paid yet. So often because the defendant is appealing or stalling or, there's, again, our legal system, these can take years. So an investor can actually step in, purchasing the right to collect the judgment, typically at a discount. So how about instead of you waiting, I'm going to give you your money and I'm going to wait for this to settle through.
Right.
So at first I was like, oh, is I making it?
Well, it's almost
weird, but like
buying a portfolio at a discount, right? So you buy a portfolio that's worth $100,000, but you buy it for $70,000 and you're hoping that you'll get the full $100,000 from the people that owe the money.
Right.
So you get that spread. That's what this sounds like to me.
Yeah. So like I said, at first I was like, well, why don't you just wait? But anyway, okay. So those are the different models. But again, why would an investor actually want to go and like pick out a case?
Pick out a case.
Oh, I like this one. Like,
right, sure.
Well, what's I don't get it.
Yeah, well, that's a great question. And just like any other investment, there's our favorite due diligence is involved here and should be involved.
Yes.
Required. So we have a little mix here of legal vetting, financial modeling, and risk management. Okay. These are all things we need to consider. First thing you want to do is an initial case screening. The goal here is to kind of sort through the fool's gold to find the real gold. You're trying to find the diamond in the rough, Okay. So you're going to do a jurisdiction check. Mm-hmm. Are third-party funding agreements enforced in this region? Good question. Look at the case type. Do you have a preference for commercial disputes, IP cases, or contract breaches with large potential damage? Good question.
Yeah.
Figure out what you like.
Yeah.
Damage potential. Is the claim size even large enough to justify the investment?
Yeah, if you're suing somebody for $10 and then 9 of that goes to your legal team, like,
right.
Is it really even worth getting a $1? Then you have to split that $1 up?
Mm-hmm.
Like, what's the point there?
Yeah. And you could think about this too as like buying a property. If you buy a property and it's priced too high, the market's too hot, and you want to put in money to flip it and make a profit, but then the market's down or it's in an area that doesn't demand that price, like you're probably not going to make your money back, or all your investment in time is not going to be worth it.
So you want to make sure you're checking that one off.
For sure. There's also plaintiff credibility here. So you want to look for strong legal standing and reputable reputations, right?
Yeah.
Now here comes the deep dive. This is legal merits. Should this case win? Is it going to win? Yeah. You want to look at the evidence quality, documents, witness credibility, expert testimonials, counterclaim and defenses. What is the anticipated pushback from the opposing side?
Yeah, how are they going to defend themselves?
Right. Counsel quality. What is the law firm's track record? What about the lead attorney's track record on similar cases, right?
Maybe they're amazing. They have a great track record, except for in this specific case, they've lost every single one. I might might be like, well, I might not
Yeah,
want to
maybe
get
not.
this. Not want to invest in this one.
Right.
But when you get one of those other cases and need help financially, let me know.
Right. You're trying to bet on the winning team, right?
Yeah.
You wouldn't bet on, if you're watching a sports game and you're a sports game, that really just should show you everything that,
You've
about
mentioned
me.
it many times.
Yeah, sports, yay. But if you're watching a football game and you think for sure this team is going to lose, why would you bet on them?
Yeah.
So those are the things we need to look at.
Yeah.
And then there's also procedural risks. Are there a statute of limitations? Are there jurisdictional challenges? Are there venue biases? These are like all good questions, right?
Yeah.
Now you've gone through all this list, right? You've answered these questions and you invest in a case and yay, you won.
Woohoo!
Wow. Now what? Well, you have to collect, right? Well, not all legal systems make it easy to collect that cash that you're owed or that you've put forth your investment.
Yeah.
You're trying to get your money back, right?
Right. Okay.
So there are things to consider here. This could be slower than your local DMV, right? Some places
I made a reservation note. They take reservations.
They
now.
do. It has gotten better, and
It
maybe,
was still long.
Yeah, okay.
For the record.
Okay, I was gonna say maybe we
I'm gonna
should
keep that.
ease up on the
I got
DMV.
really aggressive right there. I apologize, DMV. I need you, but like
DMV makes people feel a certain way.
yes,
Even the people that work there, I think it makes them
gosh,
feel a certain way. But some places are really great for this kind of enforcement, right?
Yeah.
Move quick, and then some are going to be the slow.
Yeah.
The DMV, like the sloth at the DMV.
yeah,
And then so we have to think about, can the losing party actually pay? Do they have the money?
yeah.
Before investing, you want to look at their assets, insurance, or if it's a company, you want to look at their corporate structure. Have you tried to collect from the defendant before, and was it successful? If not, maybe don't try to do it again.
Yeah. Well, it's like suing somebody or winning a lawsuit for an astronomical amount. If I had to pay, $20, I don't think I could pay. No, I'm just kidding. But like if someone sued me and they won a judgment of $1 billion, I don't have $1 billion.
Right. Yeah.
So what do you do then? You know?
It's a good question. Here's another thing. What happens if the defendant's money is overseas?
Yeah. Because I actually have $1 billion. It's in an offshore account.
Oh,
Sometimes they won't get there. Okay.
I'll be looking for that bank information later.
I love it. Anyway, that's a perfect segue into talking about risks involved here. So funding a lawsuit is like underwriting a binary bet. So it's either 0 or 100. There's nothing in between. So things to be on the lookout for, again, are adverse legal changes. So I didn't know this could happen, but there are shifts in law regulating mid-case. What if but again, cases can go on for a long time and laws change.
Right.
So if the law changes in the middle of the case,
Right.
you're stuck. Appeals risk. So even a so-called win can be tied up for years again because they have the right to appeal the case.
Yep.
So there you are, just waiting, chilling for your money back.
Yep.
There's a reputation risk. So high-profile cases can draw media attention. I mean, we've seen them all over. I saw every Diddy sketch, okay? Everyone. They weren't allowed cameras in there because it's federal.
OJ, Amber Heard, and Johnny Depp.
Oh my gosh, that one made me want to just pull my hair out. But you have to consider that. Like if they know that you're help funding that case, I don't know. Would you want to be associated with that? I don't know. And then there's concentration risk. So you want to avoid too much exposure to one law firm, case type, or jurisdiction. Again,
Diversification.
You don't want to put all them eggs and have breakfast. Okay. Yep. So let's just quickly chat about how many of these investments or how these investments are actually structured. Mm-hmm. They're a little bit different. This is where the economics are really locked in here. So you've got a return profile. Again, it's a fixed multiple versus percentage recovery. We talked about that already a few times. There's a waterfall structure. Mm-hmm. So what's the priority of repayment if multiple funders are involved? So I invest some money, you invest some money. Who gets paid first?
Yep. Right.
You got to make sure you understand those. There's caps and floors. So these are put in place to protect both the investor and the plaintiff from extreme swings. You don't want to invest way too much or not enough.
Right.
And then there's that non-recourse clause. Okay. This one, again, while this massively stinks for the investor, this clause actually ensures that investors loses their capital if the case fails, which sucks.
Mm-hmm.
So we say all this as a reminder. In litigation finance, due diligence isn't just checking off a box. It's actually deciding whether you're funding a recoverable debt or simply chasing a paper judgment that will never turn into anything.
Right.
Okay. So
Yeah.
you got to be very careful about those.
Well, listeners, that just about wraps up our conversation on litigation finance. The key takeaway here for investors is that the best litigation finance firms or funds actually act like a private equity firm meets legal underwriting. You aren't just betting on cases, right? You're building a diversified portfolio where one big case could offset several losses.
Yeah.
Diversification, that's the whole reason that we talk about alternative investments anyways. Like you don't just want to just put money down and hope it comes back to you.
No,
You got to do
that's
this with strategy.
a little smart ways.
A little bit of smarts. Use your brain.
Yeah.
Never forget too that a well-run due diligence process can actually flip the odds in your favor, right? Or at least help them tilt that way.
Yeah.
This could turn what looks like a risky lawsuit bet into something that is much closer to a structured asset-backed investment.
Yeah. Well, thanks so much for letting us turn you into a part lawyer, a part detective, part debt collector with this investment strategy. And we really do hope you've enjoyed today's episode. And we hope you don't need legal financing for anything. I might in the future. So listeners, please start saving your money to help me get out of jail. Other than that, tune in next time and we'll see you then.
Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the Alternative Investments chat.
See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.